Hello, hello, and welcome to March 25th. Alpha's ITB 40%. It was a horse race. Yes, KR was ahead yesterday. ITB was ahead the other day, and now they're back and forth battling for the lead. And now ITB has taken the lead at 40%, breaking in, of course, is it breaking above the first ratio again? Second time I come across that first ratio. And our target, of course, is 70.10, which is our third ratio, so we can start initiating our lower low, or we can get that other 60% between here, between this closing and that third ratio. We got that ROA 100. We'll be looking to taking that money off the table. This is all looking pretty good. It's a little bit high on the stochastic, but then that is also known as strength. The only time we're looking at the possibility of turnaround is when this gets into the 90s, more like 95. Then we start looking toward this possibility it could be a price reversal. Go great, keep on going. So that does take us to our second place, and that's KR. And KR is also a nice little move. It's already, this one's already closed the second ratio. Let's zoom in just a little closer there. And there. Now I got a nicer everything on screen almost. Okay, so we have to zoom out after all. Okay, so we have our we have crossed the second ratio once, working on crossing it again, and then to that 3770. So we can start looking to putting the stop here at the lower low. Actually, the lower low will be here. As soon as this closes above the third ratio, our stop will immediately go to this lower low, unless a lower low forms up here uh, prior to turning that third ratio, closing it above that third ratio. All right, KR. And that will then take us to AT&T. As I mentioned, I've been talking more about AT&T this past week because it is a hometown. Much of LA's the town, our little mega city here of Los Angeles. Um, but Warner Brothers is a major pillar of the economy here in LA County, and AT&T are the owners of Warner Brothers, and then AT&T is T. So they're at 13%, not much, but it's a nice little slow move. The moving average is inclining in the right direction. We're pushing up against the 3054, which is the first second ratio. And look, 30.44 is our third ratio, and we got a high as a 30.87, just a high, not a close, but we did get a high right here. And then so it was only like 67 cents, 60 cents off. What is the ATR on this? Let's go down and bring that up into the screen. ATR is $52, 52, almost 53 cents. So today's closing was at 30.08. We need to get to 31.44. That is approximately dollar something, and about a dollar. I'm gonna round off to $1.30. So the bottom line is that we need 3 ATR days if in an ideal trading session. And look who's come back into the positive field is CVS. All right, CVS. Uh, there is CVS. Nice, nice. This is also known as a cup and handle. Oh, that 10 EMA that we have here on the screen is almost a perfect, beautiful drawing of a cup and handle, which is pushed a lot by the IBD people. O'Neill, forgot his first name, but the original founder of the Investors Business Daily, that it was his favorite trading pattern, was known as the cup and handle. All right, so we crossed the first ratio, and still looking to get to that 80 up there on the top of the third ratio. Crossing into just by a hair is RTX. Raytheon. Ooh, nice candle movement there, though. That is a very nice candle movement. Uh, Closed above the 10 EMA. It's closed above the first ratio once. It's now looks like it has nice momentum to get into the to close against the second ratio one more time. and then finally push beyond 84.24, which would be our third ratio, to look for our lower low and higher low, the closest price action to get into out of the trade. All right, that is a conclusion of all the positives. We are still looking in the negative territory here, and so is our experiment on the penny stocks. They're not all running all that great. They're in the negative territory also. Um, there isn't much more to conclude on this. We are working on, oh, I think it's T minus. Let me look at T minus. I think there's something at T minus I'd like to bring your attention. Let me see if I just, yes, it is T minus. Okay, so what's happening now? Let's go in the few minutes that we have remaining. The Elvis Shift for April 1st, which is just a week away tomorrow. Today is a week away. Next Thursday, I believe, is April 1st. Let me go check my calendar. I know you guys are saying, hey, Greg, it is. But I am a stickler. I will check the calendar. And sure enough, next Thursday will be April 1st. So, Elvis Shift. The anticipation is that we have adjusted the scanner. One of the things that involved in schools is to always to look for your trend. What is your trend? And one way of looking for the trend is looking at the weekly stochastics. Another way is looking at price action. But weekly stochastics from my previous schools and my headmaster, Courtney Smith, at Wealth Builders, weekly stochastics was more important to him. And if that was uptrending and then the current stochastic agreed, then the end result, we would have a trade. So we rearranged we modified the stochastics to a weekly stochastic scanner, made separate. And then the result is that this came up and says that this is going to be going into a downtrend, which looks like it's going to. We ran a scanner here on the March 23rd. So that is the consideration that we're looking for the Elvis Shift. It's not been completely identified, completely decisioned on, because we also have been looking at going and doing close ratio exit. The idea, of course, is that when price closes above the ratio, the ratio that's been crossed then becomes the new stop. And so those are two Elvis shifts that are on the table. Only one will be selected. We will not take both because we want to see individually what the results would be. And that would be the point. Since we are dealing with the 3-to-1, we are leaning to the close ratio because the close ratio is more indicative of holding on to profit. Okay, well, that is the conclusion of today's report. REI and Sundial are in negative territory. Not much loss there. Again, this was an experiment to see how this would work out. So we're running about maybe less than $45 in the negative there. The other experimenter that we were doing was IAU, which was the goals. And the reason I need to bring that up is because it was not completely in the rules. And one of the rules was it did get a sell up from the rating house as a buy also, but the implied volatility was a 5, which is an indication that options are overvalued. So they're expensive. And we still took on the trade because we were testing the indicator of getting into the trade. So this still has until July. This has a July to get to a strike price of closing a strike price of 15 or better for us to be in profit for this trade. It's currently behind almost 22% for $45. So between the two experimenters, we're about $90 behind on them. But also notice in closing, we are in all right good territory with the year to date, only $134 short. And with that, we'll conclude today's report. Thank you for stopping by and checking it out.